Okay, good morning, gents. As I said, I will do this suspense account from your mock question. I'll do the full thing here, lads, on YouTube, and then if there's any questions, lads, you can have them prepared for later. All right? Okay, so let's get cracking. Okay, so the first work in here, lads, is good with a retail value of 3,300. Okay, we're returned to a supplier. Okay, and the selling price was cost plus 20%. The supplier issued us a credit note, okay, showing a restocking charge of 10% of the cost price. And no entry was made in the books in respect of this restocking charge. So we just need to record the restocking charge into our books, gents. Okay, so the first thing we need to do is calculate the restocking charge. It's just the restocking charge that needs to be recorded, as everything else seems to be recorded. Okay, so 3,300. Okay, divide that by 120. Okay, multiply that by 100. Gives us the cost was 2750. Now, the restocking charge is 10% of that cost. Okay, so multiply that by 10% and we get €275. So the restocking charge, lads, amounted to €275. So what are the two accounts that I need to open up? Well, let me do the first one here. Okay, the first account I need to open up, lads, okay, is purchases. Okay, and the second account I need to open up is creditors. Okay, now the restocking charge is 275. Okay, so this is increasing my liability with my creditors. Okay, so therefore it's a credit entry with the creditors. So 275. Okay, and therefore my purchases is taking account of this restocking charge. So it's 275 here. Okay, they're simply the two entries, lads, for your restocking charge, and that's the first working done. To make it easier for me, lads, right, and for you to actually see, what I'll do for each question is I'll do the general journal just over here to the side. Okay, so down the right hand side, lads, I will do the general journal for each working. Okay, clearly in the actual exam you'll do this whole general journal together. Okay, so I'll just set up. Okay, a DR and CR. This is obviously working one. Okay, so again, put in the purchase here. Okay, which is 275. Okay, and we put in the creditors, which is also 275. Okay, so we can see, lads, that there's no suspense. Okay, but we do need to make, okay, a little entry here. So being recorded. Okay, in this case here, lads, of restocking charge omitted. Okay, so that's the first one done. Okay. Okay, moving on to working two. Okay, so working two says a delivery van which had cost 21,000 and with a book value of 12,800 was sold for 13,000, and this check was lodged into the bank account. Okay, this had been entered as 1,300 on the debit side of the sales and as 3,100 on the credit side of the debtors. Okay, so basically what we need to do here first of all, okay, is we can see here that this had been entered as 1,300 on the debit side of the sales and 3,100 on the credit side of the debtors account. That is completely wrong. Okay, we can see here that there's no figures for 3,100 and 1,300. So the first thing I would do is I would correct those two entries. So let's open up the two accounts that they were entered incorrectly into. Okay, and the first account that we can open up, lads, is sales. All right. Okay, so open up our sales. All right, and we can see this had been entered as 1,300 on the debit side of the sales account. So 1,300 here. Okay, now I want to correct that. So what I'll do is I'll put 1,300, okay, as a credit entry. And what I'll do is I'll put a bubble around that, okay, because we know that that was our corrected entry. Okay, the next account that was entered incorrectly, okay, was the debtors account. And the debtors was told that 3,100 was entered on the credit side. So 31. Again, I want to correct that, bring it back to 0. So that is my new entry there to bring that back to 0. So that is our errors corrected, done and dusted. Okay, so now we can go back and deal with actually what happened and get the correct entries. So delivery van, which had cost 21,000. So a delivery vans, so we come down here. Okay. If you look at the trial balance there, lads, there's no delivery vans, but use motor vehicles. Now, if you wrote down delivery vans, so long as you know it's motor vehicles in the balance sheet, it's completely fine. Okay, so we got rid of delivery van of 21,000. So that is a credit entry because 21,000 worth of motor vehicles is leaving your motor vehicles account. Okay, so we put a bulb around that as we know that is the entry. Okay, and with a book value of 12.8. Okay, now the reason why they give us this here, lads, okay, is that we can work out the accumulated depreciation on this asset that we are getting rid of. So 21,000, okay, minus 12.8 will give us 8,200. So that is your accumulated depreciation. All right, so we can put down here is your depreciation. Okay, and as we know, lads, depreciation, okay, decreases an asset, so it's a credit entry. Okay, so if we're getting this back, it's going to be a debit entry. And the debit entry here is 8,200. All right, and that's the depreciation taken care of. Now, it was sold for 13,000, which means open up a bank because it's entered into our business bank account. Okay, it was sold for 13,000. That means 13,000 was received into the bank account. Okay, if it was only worth 12.8, okay, but we sold it for 13, well, then we made a profit. Okay, no, we don't need to do a T account here. We can just note, okay, profit, okay, on sale, 200. Okay, and as we know, lads, that will go into your gains in your P&L account. All right. Actually, do you know what? I'll go back here to the first working. And in red, so it'll be handy for me doing it. Purchase is your P&L. Okay, and creditors is your balance sheet, because we're going to need those later on. Okay, so again, as I said, lads, I'll keep my general journal going down the right hand side here. So again, I'll just... Okay, the debit side, credit side. This is in relation to working two, obviously. Okay, so we've got sales. Okay, 1.3. Handy to have the bubble so I know which figures I'm taking. Okay, debtors 3.1. Okay, motor vehicles. Okay, 21,000. Okay, depreciation. Okay, 8,200. Got bank, which is 13,000. Turn that down there. We've got profit on sale. Okay, we know that profit on sale, gentlemen, okay, will be a gain, and a gain is a credit entry. All right. Remember, that's a gain. We know a gain is a credit entry. Now, let's add them up here and see if we have a suspense. I'm going to strongly believe that we will have a suspense due to the error at the beginning. So if I add up the right hand side there, 1.3 and 200 is 1.5, so that's 22,500. Okay, so the credit side is 22,500. If I add up the debit side, it's 3,100 plus 8,200 plus 13,000. Okay, and that gives me 24,300. So the debit side is obviously larger. Okay, so we have suspense, so 24,300 minus 22,500. Okay, gives us 1,800. All right, so my suspense. Okay, 1,800. So I now know that they all add up and are balanced. Okay. So sales will be P&L, debtors, okay, balance sheet. Motor vehicles is balance sheet. Okay, your depreciation there, lads. Balance sheet. Your bank also balance sheet. Okay, your profit on sale, P&L, and your suspense will obviously be your suspense. Okay. Now we have to make a little entry here. Okay, so being corrected. Okay, so why is it being corrected? We could say of incorrect. Okay, recording. Okay, of the sale of motor vehicle. Okay, lads, and that's the second working done. All right. Okay, moving on to the third working. I'll go down to a new page here. Okay, what does the third working says? It says Clancy sold goods on credit to Barry's Bakery Limited for 12,200 plus VAT at 13.5%. Now the only entries in the accounts were that the VAT inclusive, so that means the figure plus VAT, was entered on the debit side of the equipment account, and VAT exclusive was entered on the credit side of the debtor's account. Okay? Now, first of all, okay, if you look at that more carefully, okay, you see the 12,200, okay, was entered on the debit side, plus VAT was entered on the debit side of the equipment account. Well, that is incorrect, okay? So you know that's an error, all right? And the VAT exclusive figure was entered on the credit side of the debtor's account. We also know that's an error, okay? So the first thing you should do, lads, is go and correct those errors and then put in the correct entries. Okay, so the first thing I'll do is I'll open up the equipment. Okay. Now what happened? It says the only entry that counts are the VAT inclusive. So 12,200 plus your VAT. Okay. So let's do that there now. So 12,200. Okay. Add on your VAT. You get 13,857. Okay. The debit side. So 13,847. Not only was the figure wrong. Okay. But so to what side of the account. Okay. I want to correct that right away. So I'm going to say 13,847 and put my bubble around that so I know which figure I'm going to be taking over to my general journal. The next account I need to open up, lads, is my debtors. Okay. So we're saying then that the VAT exclusive figure was entered on the credit side. So this was also wrong, obviously. Okay. So that 12,200 is a VAT exclusive, the figure excluding VAT was entered on the credit side. I want to correct that right away. Okay, put a bubble around that. Okay, there's my errors corrected. Now we can go about correcting it. Okay, or put in the correct entries. Okay, so let's have a rattle at that. Well, first of all, it's sold goods on credit. Okay, so we didn't sell equipment, we sold goods. So we can open up our sales account. Okay, and what did you sell? Well, we sold 12,200 euro worth of sales. Okay. With that, VAT also went with it. Okay, and the VAT figure, okay, is 1,647 euro. Okay, and that means it was sold on credit, so we sold it to a debtor. So the total value of that sale was 13,847, and that is a debit entry into the debtors because it's increasing your asset. Okay. There, your correct entries, lads, for that transaction. Okay, so go over to our general journal once again. Okay, you've got your debit side and your credit side. Now, obviously, this is part 3. Okay, we've got equipment. Okay, the entry we did there was 13,847 as a credit. Okay, we've got 2 debtors. I'm going to keep them separate, lads. Okay, we've got debtors again. We've got 12.2. We've got 13.847. Then we have sales. The sales was 12,200, and we also have VAT. The VAT is 1,647. Okay. I believe we have suspense here. Okay, so our suspense. Again, lads, if we add up the debit side, we add up the credit side, we'll see that we have suspense on the debit side of 1,647. Okay, clearly that pairs off with that. That pairs off with that. So this was your suspense here. All right, we've got a suspense. So let's give our little spiel down the bottom here. Okay. So being corrected. Okay. Of due to. Okay. Incorrect treatment of sale. Okay. And again then, to make it easy for ourselves, we will look at equipment, which is balance sheet. Debtors by 2 is balance sheet. Sales is P&L. VAT is balance sheet. And suspense is suspense. Okay, and that's the third working done. Okay, moving on to the fourth working. The fourth working says a payment of 1,000 was received in respect of a debt previously written off. This represents 80% of the original debt, and this debtor wishes to continue trading with Clancy and has undertaken to pay the remainder of the debt within a month. No entry was made. Okay, so no entry was made. It was going to be very easy to do this one. So, first thing I'll open up, lads, is my bank. Because your bank received a payment of €1,000. So €1,000 into the debit side. Whoops, sorry. Okay, €1,000 into the debit side of the bank. Okay, I don't need to put bubbles over these ones because there's no errors. Alright, this just hasn't been recorded. Okay, next account I'm going to open up is debtors. Now, that €1,000 represented 80% of the debt. Okay, so 1,000 divided by 80, okay, multiplied by 100 is 1,250. Okay, so they paid me 1,000, so they owe me 250 quid. Okay, now don't forget we've got bad debt recovered, which is a gain. Okay, if it's a gain, we can see here it's a credit entry 1, 2, 5. Okay, lads, and there's your 3 entries for that. And again, over here, really quickly, lads. Okay, we'll open up a general journal. Debit side, credit side. We've got bank, which is 1,000. We've got debtors, which is 250. We've got bad debt recovered. Okay, which is 1,250. Okay, give it a little spiel. This is being recorded. Being recorded of bad debt recovered. Okay, make it easier on ourselves. That bank is a balance sheet, debtors is a balance sheet, and bad debt recovered is a gain in the P&L. Alright, lovely. The final working here, boys. Okay, working V, the fifth and final working. Wages due 1,680 and rent prepaid to Clancy 850 were not recorded. So again, it's straightforward because there's no corrections here. Okay, so and I'll open up here. The first one is wages due. Okay, wages due, lads, will be a balance sheet entry. It's a current liability. If it's a current liability, it's a credit entry, and it's 1,680 on the credit side. Okay, don't forget with this one, lads. Okay, you have to have your wages account also. Okay, and your wages account then is an expense, so it's 1,680. Okay, down below here then you've got your rent prepaid. Rent prepaid, lads, okay, you are receiving the rent prepaid to you is a liability, so it's 850 in the credit side. Okay, but then you also have rent receivable, that's received, okay, so therefore it's a gain, so therefore it's 850, okay, as a debit entry. Alright, so again now really quickly we'll do the general journal. Okay, debit, credit, no need for that length of it, it's going to be a short one. Okay, so we have wages due. Okay, there's 1680. We've got wages account, which is 1680. We have rent prepaid, which is 850. Okay, and then we've got the rent account, rent receivable account, that is 850 here. Okay, as you can see, there's no suspense, so we can say being recorded. Okay, of wages due and rent received prepaid. Okay, wages due is a balance sheet entry, wages is a P&L, rent prepaid is a balance sheet, and rent receivable is a P&L entry. Okay, and there are your workings done, gents. Alright, now that is the general journal done also. Okay, now obviously lads, as I said at the start, you put all that general journal together. Okay, so now I'm going to show the suspense account. So the B part of this question, okay, is your suspense account. Okay, so you've got your date, details, okay, so let's go back and find our suspense. So there was only two suspense, if I remember correctly, part 2 and part 3. Okay, so part 2, okay, here's your suspense, alright, 1,800 on the credit side, okay, and was to do with the sale of motor vehicles. Okay, so let's go down here. Alright, so it was to do with sales. Okay, so I can put in here, let's do with your debtors. Sales was working 2 and the figure was 1,800. Okay, so let's go back up to the third working. Okay, there it is, we can see it here. Okay, suspense 1647, debit entry. Okay, and it was to do with the, what was it to? I suppose equipment again. Yeah, equipment debtors will do. Alright. So 1647. Okay, so this is working 3 was equipment / debtors. Wouldn't worry too much about those, I was not getting marks for those. Okay, 1647. Okay, so as we can see, lads, the original difference was on the debit side, so orig. Difference 1,800 minus 1647. Okay, we'll give you 153. Okay, close it off. Okay, and that's your suspense account done, lads. All right. Now, when I fit it in here, I will. Okay, so next part of the question then was to prepare a statement showing the correct net profit. Okay, so statement of corrected net profit. Okay. So the first thing we do, lads, is we go back to the trial balance. We take our net profit, which is 186,500. We write original net profit. Okay, we'll keep 2 columns here. I should have done that earlier. Okay, and it was net profit 186,500. Okay, it doesn't matter which one you do first here, lads. I'll add. Okay, now remember your rules, lads, okay? So if a journal entry affects the P&L and it's in the credit column, okay, to get the correct net profit, we add on. Okay, so what I do is I go back to my workings and I locate any entry that affects the PL on the credit side and I'll add it on here to my original net profit. Let's go back up. Okay, so the first one there, P&L, debit 275. Don't need to worry about it just yet. Okay, I've got the first one that affects the credit entry in working 2. So I'll highlight this here now. Okay, so I have 1,300 due to sales. Okay, and I also have profit on sale here of 200. Okay, so working 2, sales and profit on sale. So let's go down and put those in. Okay, so we had sales, we had profit on sale. Okay, so our sales, if you remember lads, was 1,300 and our profit on sales was 200, and they both came from working 2. Okay, let's go back up. Working 3, so a credit entry that affects the P&L. Okay, there we have it. Look, we have sales. Okay, 12,200. That's the only entry in the credit side that affects the P&L. Okay, so working 3, sales 12,2. Okay, it was working 3 and it was 12,200. Okay, let's go to working 4. Yes, okay, bad debt recovered. P&L, oopsie daisy, sorry. Okay, P&L 1,250. Okay, what was that in regards to? Oh, bad debt recovered. Okay, and that was 1,250. Okay, add those 4 figures together. Okay, and you get 1,315, 1,515, and 12. Yeah, 14,950. We're adding those on. So 186 and 14 for 190. So it is 201, 450. Okay, less expenses. Or less, sorry, not expenses, just less. Okay, any P&L entry on the debit side, lads, we take it away. Okay, so let's go back to 1. No P&L entry in 1. Oh, there is, sorry. Okay, P&L here, 275, debit. Okay, so purchases, 275. Okay, so purchases, working 1, 275. Okay, go back up. The debit side, P&L. So no. Okay. P&L debit side, no. P&L debit side, no. Okay. P&L debit side, yes. Alright, here they are, look. Wages and rent receivable. Okay. So 1,680 and 850. So wages was working V and it was 1,680. And rent receivable was also working V and that was 850. Okay, add those 3 figures together. 275 plus 1,680 plus 850 gives you 2,805. Okay, so 201,450 minus 2,805. Okay, it gives you 198,645. 198,645. All right, gents. And then that there, lads, is your corrected net profit. Okay, so I'll move on to a new page entirely. And what we'll do then is we'll do the corrected balance sheet. Okay, so this is D. Okay, so this is your corrected. Okay, now remember, lads, okay, If a general journal entry, okay, affects an asset and it's in the debit column, you add it on. Okay, and if a general journal affects an asset and it's in the credit column, you take it away. And the opposite is true for liability, gents. You have that sheet, lads. You know those rules. You must learn them off. I think this is why people may be struggling with the balance sheet. Okay, you must learn them off, boys. All right. So let's go and correct this. Okay, so again, you're getting your marks as for the figures here. All right. So don't worry too much about the headings and so on and so forth. Okay. Obviously try and get them right, but don't worry about them too much. So we've got premises. Okay, we've got equipment. Okay, we've got motor vehicles. Okay, now these are all assets, obviously, gents. Okay, so remember, debit column, add it on, credit column, take it away. Okay, now I'll do all the little workings here for you. So premises, okay, don't need anything because we didn't affect the premises. Okay, so what we can do then is we can come over here and have your cost, depreciation, and your net book value. Okay, 750,000. Okay, nothing there, 750,000. You get marks for that, lads, so please don't forget them. Okay, equipment and motor vehicles. Alright, so equipment was 225,000. Okay, and we got rid of, no, I'll show you this now. Yeah, it is. Okay, then equipment. So equipment, okay. So you can see here with equipment, gentlemen. All right, there it is. Okay, so that figure there, lads, is obviously on the credit side. So we're going to take it away. So 13,847. Okay, so 13,847. Okay, and you get 211,153. Okay, 32,000. All right, which gives you 179,153. All right. Okay, moving on to motor vehicles. So your motor vehicles as was 73,000. Okay, if you go back in here to motor vehicles, when we disposed of a motor vehicle, what working was that again? Here we go, working 2. Okay, motor vehicles. So we're getting rid of here 21,000 credit entry, so we take it away. Okay, we've also got depreciation here now. Okay, and depreciation, lads, don't forget. Okay, you're reducing assets like liability, so obviously we'll be taking that away also. So 21,000 and 8,200. Okay, so less the 21,000. Okay, and that gives you 52,000. The depreciation part of it then, if you like, gents, it's 23, was it, motor vehicle? Yeah, 23,000. Okay, and you're taking away that 8,200. Okay, and that is 14,800. Okay, and that gives you 37,200. Alright, we can close those two off. Okay, we'll add those up there quickly. 750,000 plus 211,153 plus 52,000. Okay, is 1,013,153. Those two together is 46,800, and then 750,000 plus 179,153 plus 37,200. Okay, it gives you 966,353. 353. All right, on to the next heading. Okay, which is current assets. Okay, and we have stock, including suspense. Okay, the stock was 84,500. Now, if we go back to our suspense, Okay, if you want to do it over here, is it working? Okay, your stock was 84,500. The question is, do you take this away or do you add it back on? Well, the debit side was down, okay, by 153. Original difference, debit side was down by 153. Okay, now stock is an asset. An asset is in the debit column. If they took it away, if the general journal was down by 153, that means they have to add it back onto stock to bring the debit side up. Therefore, we need to take it away. Okay, and that'll bring it down to 84,347. Okay, so minus what was it, 153. Okay, your stock there, so it's 84,347. All right, now we can do our debtors. Okay, your debtors are 26,200. Now, the debtors was affected quite a bit. Okay, so let's go and work from the top and work our way down. Okay, so purchases, creditors there. No, okay, debtors. Okay, so where was debtors affected here? Okay, just in one spot, so not too bad. Okay, so here we have it. Look, debtors, 3,100. All right. Now it's in the debit column, so therefore we add it on. And there's no other debtors in working too, okay? Okay, so we're going to add on. Oops, sorry. Okay, so we're adding on that 3,100. Okay, let's go back up to the third working. You can see debtor was affected twice, okay? So here, 12,2 and 13,847. Okay, debit side, so we're adding on. Okay, so 12,2, okay, and 13,847. Okay, let's go back up. Okay, debtors again, okay, 250. Debit sides we're going to be adding on. And that was it. Okay. Let's come down here. 250. All right. So that's 26,200 plus 3,1 plus 12,2 plus 13,847 plus 250. Okay, equals 55,597. Okay, and then we had cash. Okay, thankfully cash wasn't affected, so 2,100. Add up those three figures, plus 21, plus 84,347, gives you 142,044. Okay. All right, lovely. Next heading is less creditors falling due. Okay, less than a year. The first one we have here, lads, is creditors. We know creditors, okay, was affected, so 18,700. Okay, we go find where we affected creditors. Okay, working one, we have 275 right here. Okay, now it's a liability, gents. Okay, so if a journal factory entry affects a liability, it's on the credit column, you add it, okay, back on to get the correct figure. So 275, all right. Now, no creditors there, no creditors there, no creditors there, and I know there's no creditors in the last one, so that's fantastic. All right, so we add it, okay, back on, and it was 275. Okay, and that gives you 18,975. Okay, bank was affected. Okay, now bank in this case here, gentlemen, is a liability. It's an overdraft, so be careful of that, right? So 23,100. Okay, wasn't affected in the first working, was in the second working. Okay, now look, it's a liability. Okay, a debit entry. Okay, If it affects the liability, we take it away. So we'll be taking away the 13,000. So let's go down and do that. Okay, so we'll be taking away that 13,000. Okay, let's go back up and see if there's anything else affecting it. Okay, so where was that there? That was bank. Okay, 13,000. Okay, we can see it here. Look, working IV. Okay, there we have it. Okay, bank. Again, it's a debit entry. Okay, so we're going to be taking it away. Okay, so take away that 1,000. Okay, so in essence, we're just taking that 14,000 away from that, which leaves us with 9,100. Okay, the next thing they have there is VAT, and VAT was affected. Okay, VAT in this question, lads, is a liability, so it's 6,500. So once again, we go back, okay, to see where VAT was affected. Wasn't that working? Was it? There it is, okay. So 1647. Okay, so working 3 there. Okay, it's on the credit side. Okay, so we'll be adding it on. So 1647. Okay. 1647. That's going to give us 8147. All right. Now, this is where people make a little bit of a mess. Okay, they forget. Okay, if we go back up here, lads, there was 2 new entries that we put in here. Look, these 2 for the balance sheet: wages due and rent prepaid. Okay, and these 2 lads in this case here were, of course, wages due is liability, rent prepaid is liability. So we need to put those into the balance sheet. Okay, a lot of people would have lost marks there. Okay, so wages due was the first one. Okay, and your wages due there was 1,680, and rent received able prepaid 850. Okay, we add those 5 figures together. Okay, we get 38,752. Okay, we take that from that. You get your working capital, okay, of 103. 103, 292. Okay, that's a positive figure. All right, so 966,353 plus 103,292 gives us our total net assets. Okay, 1069. Okay, 645. Okay, so that was your working capital. Okay, and that is your total net assets. All right. Okay, so moving on to finance buy now. Okay, and we will open up the first one there, which is capital. Okay, wasn't affected. Oops, sorry. Come back to me. 890,000. Okay, net profit. Okay, we take the new net profit, lads, don't forget. I'll go back up and show it to you. There it is there, look. 198,645. Okay. 198,645. All right. We can add those together and then take away our drawings. Drawings wasn't affected either. Okay, so that's 19,000. Okay, so let's see if this works out for us. 890,000. Add 198,645, and that gives us 108,8645 minus 19,000 gives us, lovely, 106,9645. Should I close that there? Close that there. Okay, and that is your capital employed. Okay, lads, and there you have it.